Hi YouTube, my name is WMBishop, also known as WMBishop on eToro. I'm here today to tell you my performance for the month of July 2022 on eToro. My portfolio was up by 6.47%, and it's actually the best month I've had so far on that platform. Now, I could stand here and say, hey, look at me, I'm great, look what I can do in a month. But I know, and you should also know, that performance isn't measured in a vacuum. It should always be compared to our benchmark. So let's have a look at the slideshow. Let's see how I got on. That grey bar there, that's my portfolio, 6.47% for the month of July. The blue bar is an ETF with the ticker symbol SWDA.L, and that represents the MSCI World Index, which I consider to be the benchmark for my portfolio. Now that was up 7.59% for the month, or 1.12 percentage points more than my portfolio. The S&P 500, the orange bar there, that was up 9.11% for the month of July. So when you consider my performance against the benchmark, you will see I've underperformed my benchmark. Whereas June 2022, I lost 5.19%. So many people may say, oh, I'm not sure about WMBishop, he lost money. But if you compare it to my benchmark, you will see I outperformed my benchmark there by 3.51 percentage points. And so I consider June 2022 in performance terms to be better than July 2022. Yes, in June 2022 I lost 5.19%, and in July 2022 I made 6.47%. So many people would consider July to be a better month. However, I consider June to be a better month because that is where I outperformed my index by a wide margin. The good thing to know is over the 2 months, I have outperformed the MSCI World Index, I've outperformed the S&P 500. However, you should know, and I've mentioned this before, that successful investing is achieved over the long term. We should not fixate too heavily on short-term monthly movements. If we fixate too heavily on short-term monthly movements, that will lead us to sell or buy more often. And if we're buying and selling more often, we're going to have transaction costs. Now, there's no commissions on eToro, but there are spreads. The spreads are low, but that's still a cost. And if we keep buying and selling, we're going to add to our costs, which is going to reduce our returns. And so rather than fixating too heavily on monthly movements, we should focus over returns of 3 to 5 years. I believe they're far more important to look at. And I'm going to pose this question to you. What is 1 year? 1 year is just 365 days. It's just the length of time it takes for the Earth to orbit the Sun. That's all. And so unless we are invested in agricultural companies or other companies that benefit from planetary movements, then why should we be looking at our investments over 1 year time horizons? It just doesn't make sense. A business plan will see benefits over 3 to 5 years. The share price will reflect that in 3 to 5 years. However, in the short term, share prices are just moved by sentiment and not so much by earnings. So look at 3 to 5 years. Over the past month, 12 of my investments reported earnings. Revenue and earnings growth came from D.R. Horton, the house builder, America's largest house builder. However, revenue there was higher not because they sold more homes, they actually sold fewer homes. It was because house prices are growing. Ideally, revenue would come from both house price growth and also number of houses sold. So that's something that I must watch with D.R. Horton. Visa and MasterCard both reported revenue and earnings growth. Earnings growth for Visa was up 36%. Earnings growth for MasterCard was up 12.5%. This is as travel has recovered, so they are getting more revenue from cross-border transactions. And this increase, you'll be pleased to know, was despite this being the first quarter where they haven't had a Russian business, they haven't had revenue coming from Russia. So to have an increase in earnings and revenue growth, I believe it's really impressive. Euronext and Verisign were also the two other companies this month to report revenue and earnings growth. 3 of my companies grew revenue but had declining earnings. Domino's Pizza, they have had higher input costs representing their ingredients in their pizza. They weren't able to pass this on to consumers, and they're also having a driver shortage. So the demand is there for the pizzas, but they're having problems actually delivering them. So they can't meet the demand as much as they would like. Alphabet, that is the owner of Google and YouTube. And then we go on to Apple. Apple's revenue was only 1.9% higher. Their earnings per share was down by 7.7%. And this is mainly due to supply shortages. China was more or less in lockdown for the whole of this 3-month period. A lot of their products originate in China, and so they had problems meeting demand for iPad and for Mac in the quarter. Happily though, you'll be pleased to know that lockdowns are easing in China and supply shortages are also easing. Now we move on to the 4 companies who had declining revenue and earnings. Lockheed Martin, their earnings are based on long-term contracts, and so they're quite lumpy over a 3-month period. Sometimes they'll be up, sometimes they'll be down. It doesn't really point to the whole picture for the company. However, a good development during the last 3 months was that they transferred a huge amount of pension liabilities onto an outside company and seriously reduced the risk on the balance sheet. This quarter for Kindred, that's a gambling company, this was the final quarter where they're not present in the Dutch market compared to being present in the Dutch market the year before. The Dutch market is a huge source of revenue and earnings for Kindred. They were awarded a license and they began operating in the Dutch market again on the 4th of July, and we will see the effects of that going forward. Also, troubling Kindred on a year-to-year basis is the normalisation of the sporting calendar in the wake of the world reopening post-COVID. We will eventually come to a period where the sporting calendar is normalised. We should see that from the next year. Meta Platforms, that's the owner of Facebook, Instagram and WhatsApp. Revenue growth is slowing for Facebook, and they are transitioning into a period where metaverse is hyped to be the driver of earnings going forward. In the wake of the slowing revenue growth and in terms of the wider macro environment, they have decided to slow down investment in the metaverse, slow down spending there until it starts to show more promising results, and this should boost Meta's bottom line going forward. T. Rowe Price is an asset manager, and as you would expect, as share prices fall, their asset under management falls, and so their revenue, which is derived from that, also comes down. They generate most of their revenue from America, so there is good opportunity for T. Rowe Price to grow internationally. They also are progressing well on the acquisition of Oak Hill Advisors. 12 out of 24 of our investments outperformed the index in July. So why did I underperform the benchmark this month? Well, 12 outperformed the index, and so 12 did not, which is the result of diversification. So should I abandon being a diversified portfolio? No, that would be absolutely ridiculous. Diversification was the reason why I outperformed in June. It happens to be the reason why I didn't outperform in July. But, as I mentioned before, we shouldn't fixate too heavily on these short-term movements. We should invest for the long term, and over the long term, diversification reduces the amount of risk you face for a given level of return. Another reason I cite for the underperformance in the benchmark this month is the cash balance on my account. This was following on from the deposit at the start of July. I have invested some of that money, and I will continue to look for exciting companies where I can invest the rest of that balance. Now, if the overall stock market was down in July, this cash balance would have been a boost to my returns, and it would have meant that as it returns 0% rather than a negative amount, it would have meant that I probably outperformed the index. It didn't happen to go that way in July, and it was the reason why I underperformed. But over the long term, we must try to reduce that cash balance as much as possible, because over the long term, stocks in general outperform cash. Here are the top 3 gainers for my portfolio in July. Ashtead, which is a company you might not be familiar of. They are an equipment hire company. They recorded 33.5% increase in the share price for this month. They reported good earnings figures the month before, and in the month of June, the share price was actually down by 17.2%. So this was partly due to the good earnings they reported in June, and partly due to the recovery in the share price following that poor month. Nvidia were up 19.82% this month, reversing the 18.8% share price decline we saw in June. So they're almost back to where they were at the start of June. And they have earnings coming up later in this month. Apple was the only one of those 3 to report earnings this month. And as you may remember, they reported revenue growth, but their earnings were down. Their earnings did beat expectations, so that did provide some boost to Apple for the month. But most of that gain was achieved before the earnings release, and it was a reversal really of the share price that went down 8.1% in June. So my outlook, I will continue to invest in companies with superior fundamentals and competitive advantages in comparison to those in the wider market. I classify companies having superior fundamentals as those with a high return on capital employed, high gross margins, and high operating margins, amongst other things. You will see more explanation of this on my profile on eToro. Just go to eToro.com and search WMBishop, and you will see on my pinned post a full explanation of what I mean there. 6 companies in this portfolio will report quarterly earnings in August. I will read the earnings reports, listen to any conference calls, and I will report back on eToro with a summary. And while I'm not doing that, I will continue to search and invest in companies using the cash balance that has built up largely due to the deposit on the 1st of July. So here's one final look at my performance for the month of July. I returned 6.47%. However, I was underperforming by my benchmark by 1.12 percentage points. So there you have it. There's the summary of my performance for the month. Now, one final thing I need to tell you is this is just for educational purposes. I am not a registered financial advisor, so none of this, what I've told you, should be taken as financial advice. If you are interested in copying me, but you are unsure of how to move forward, perhaps you should seek the help of a registered, suitably qualified financial advisor. If you have enjoyed the video, please subscribe to my channel, give me a like in the like box below, and tell me what you thought of the video in the comment section. If you are interested in seeing my earnings reports before I report them on YouTube, follow me on eToro. If you are interested in investing, perhaps you'd like to copy me, but always consider advice from a financial advisor. I hope you've enjoyed the video. I will see you again soon.